Hello class, this is a tutorial on problem 3 out of the book. As you can see, I've transcribed everything from the book here, and we are supposed to journalize entries for the disposal of plant assets for Pine Company. So as we can see, they had the following assets here: machinery, forklift, and truck on January 1st, and throughout the year the assets were removed from service. So for the first one, we need to journalize it. Um, the machinery was retired on January 1st. There was no sale, it was just retired. And so we need to accumulate all the depreciation, and since it was not uh, sold, its depreciation is all of its cost. And so we come here and put in accumulated depreciation on equipment, and we debit that account for $71,000. And then in order to cancel out the debit, because we have to have both sides equal, we need to credit an account, which is equipment. And that way our assets and our liabilities and everything will be balanced. So that takes care of the first piece of equipment. The second piece of equipment is the forklift. The forklift was sold on June 30th for $12,000. So since it was sold, we have multiple steps here. The first thing we need to do is, since it was sold on June 30th, we need to accumulate depreciation for it, or to journalize that depreciation anyways, for half of a year. As you can see, I've highlighted here a couple of the things that we need to have formulas for. And the first one is this accumulated depreciation and depreciation expense. In order to figure out how much has depreciated, we take the cost of the equipment and divide it by 5, or first we would take it minus the salvage value, but since the salvage value is 0, we just take that and divide it by its useful life, which is 5 years. And then we take that over half of a year. So it depreciates 6,000 a year, but since it's only half of a year of depreciation, we divide it. So that's 3,000. So we debit the depreciation expense account by 3,000, and we credit the accumulated depreciation equipment account by 3,000. And that's to record the depreciation. The second thing we need to do is to record the sale of the forklift. And so the forklift was sold for $12,000, so our cash account is debited by $12,000. And then we need to figure out the accumulated depreciation total on it. And so we use the same formula over here. We take the 30,000 and divide it by 5 years to find its useful, or its depreciation per year. And then since it was only 3.5 years old, we times it by 3 and then add 3,000 for half a year, and that gets us 21,000. The next thing we do is we need to credit the equipment account. Since we sold it, we credit the equipment account $30,000 because we no longer have that. And the last thing we need to do is the gain on disposal of plant assets. So we take the 30,000, which is the equipment cost, and subtract it from the accumulated depreciation, which gives us 9,000 book value. That's what it is worth on our books. And then we sold it for 12,000, and we take the 12,000 that we got and we subtract it from the book value of 9,000, and we find that we had a $3,000 gain on the disposal of plant assets, or the forklift. So the last step we have is the truck. The truck was discarded on December 31st. And so the truck had a full year of depreciating. So all we have to do to find that is to take the truck's value, which is $33,400, and then subtract it by 3,000. And that will give us $30,400, and then we divide that by its useful life, which is 8 years. And that will give us its depreciation per year, and since we're trying to figure that out, we put it in here. We have the depreciation expense for $3,800 debit, and we credit the accumulated depreciation equipment account. And so we have recorded the year's worth of depreciation on the truck. The second step to this is to record or journalize that the truck was discarded on December 31st. Now here it gives us a bit of instruction. It says that the loss on the truck was $10,600, so we can check our numbers. And also the company uses straight line depreciation, which I forgot to mention. That's the method we've been using this whole time. And so the truck has depreciated for 6 years since it was bought in 2012. So what we need to do is figure out the accumulated depreciation for all those years, which we already figured it out for 1 year. And so all we need to do is times this 3,800 number for 1 year times 6 years, because it's been used for 6 years, from 2012 to the end of 2017, which is almost 1 day, 2 days apart. So that gives us $22,800, and we put it in the debit account. And then we need to record the loss on the disposal of plant assets. So the equipment was worth $33,400, and we had accumulated depreciation of $22,800, and that gives us a $10,600 book value. And since the truck was discarded, we did not make any money, and so we can't take any cash out of that. And if you notice, our $10,600 here from our book value also equals our loss on the truck up here that they gave us. And then the last step to do is to credit the equipment account of $33,400, because we no longer have that equipment. Now I believe I did all of this correctly. If I didn't, let me know in the discussion board, and I hope this helps.